Hello folks, my name is Neil and welcome to the Stock Market Fundamentals video series. In today's episode, we will do something special. Not only will we take a look at a stock from a fundamentals and a technical standpoint, we will also see what kind of options strategy we can apply on this stock. I hope you have fun. Let's begin. The first stock is Ultratech Cement. So let's go to Screener and look at the fundamentals first. And it'll be a very quick look. Okay. Ultratech Cement is engaged in manufacturing and sale of cement. We are not here to look at that. Cons are it's a little highly traded above the book value, but we will take a look at the technicals in just a bit. Peer comparison market cap is the highest, nearest competitor is half the size, or less than half the size, which is an excellent sign. Sales have been consistently increasing. Profits have also been consistently increasing. That's a very healthy sign. Um, Balance sheet. Liabilities and assets, 1:4 ratio. It has been maintained 1:4 ratio, so that's a very healthy sign. Not a problem. I don't see liabilities increasing faster than the assets. Cash flows have been good. Ratios have been good. Debtor days at this point stands at 21 days, which basically means they are able to return their debts to their debtors in 21 days, which is a good sign. Promoter share has actually reduced from 61.69% to 59.96%. A little bit concerning, but if you look at the FII share, well, FII share has also reduced, but the DII, which is domestic institutional investors, share has increased quite a bit from 7.58% to 14.51%, which essentially means that the domestic institutional investors are optimistic about this stock. Very quick look at corporate actions. No bonuses or splits, but they've been consistent with their dividends on the stock. Now, I prefer a stock with bonuses and splits for the long-term investment because that helps me multiply my actual capital investment. But for swing trading, I would say this is not a bad stock. Let's quickly go to the um, uh, to the charts. Now, let's look at the monthly chart. The monthly chart clearly shows that over the last, I don't know, 20 years, the stock has been consistently rising. This is a healthy sign. Now, if I were a swing trader, like I already said, this may not be a very good stock for the next 10, 15 years because there are no bonuses and splits. Having said that, if you look at the face value of the stock, it is still standing at 10%. So there is definitely potential for them to give bonuses and splits. They may not have given it now so far, but once the stock price rises above 10,000, there is a chance that you might get bonuses. So I wouldn't mind holding on to this stock if I already have it. If I were a swing trader, then I can see that the stock has come down a little bit. It did react from this demand zone earlier. Now there is another demand zone here, and I see that there is an entry. I have plotted an entry at 7199.3, which it touched, by the way, and went up. So this is healthy. It has started rising, and considering the market conditions, if the market continues to rise like it is rising right now, there is potential that this stock might definitely go up. Uh, so if you're holding the stock, I would hold it for a while, and then I could set a target of somewhere around 8,061, at which point I would sell and then wait for it to correct. Right? Now, let us assume that you're holding an option for the stock. I mean, what kind of a trade is potentially possible? What kind of an option strategy is potentially possible on this stock? I have opened up a tool for checking the IV, and let me refresh the chart, and let me remove the basing candles. There you go. So considering that there is a strong demand zone here and the Bollinger Band is above the demand zone, I would plot an entry at somewhere around 7199. I would want the stock to come down till 7199 and then enter a bull put spread. Bull put spread, which means that If the since the volatility is high, it essentially means that the premiums are already very high. So it would be a good idea to uh, sell an option instead of buying it. So if you sell an option at a very high premium, when the premium comes down, the volatility comes down, you buy it back and you earn a profit out of that. If I go to Sensible, I can essentially show you how this trade can be taken. Hold on just a moment. Sensible. Let's say I go to, yeah, we'll have to log in, I think. Right, let's build a strategy here. Um, Ultra Cement Go. Build custom strategy. Let's say I sell a put of 7,100. Now you would ask, why 7,100? Well, simply because the demand zone here is at 7,189. Anything below this demand zone is ideal. I would have chosen 7,000 as well, but if I'm selling, I want a higher premium, right? So I'm getting 95 premium here at 7,000, and today the market is closed. So, this is an approximation. I would have to take a look at the volumes and the premiums in an open market. But this is an approximation. If I sell 7,100, the premium is higher, much higher than 95. I get a 122 rupees premium. Um, and it is not you know, it's not below the demand zone, but it is still much below the Bollinger Band. If I go for, let's say, 7,200, the premium is still higher, but 7,200 is above 7,199. So there is a possibility that the price might go down and breach that, and I may make a loss. So I want to control my risk as well as make a good profit. So that's the reason I'm choosing 7,100 put to sell. And to control the risk, I will pick 6,500 with decent volumes, and the premium is to 24 rupees only. So I would have to deduct 122 minus 24, which is somewhere around 98 rupees. That is my net premium that I'm getting. Now, if I pick this bull put strategy, what it means is if Ultratech Cement goes down below 7,000, I start losing profit. And as it goes down further and crosses 7,000, I start making a loss. So my stop loss would be at about 7,100. Now let's take a look at the chart quickly. Yes, it crosses 7,060. I book my losses and get out of the trade. It would still not be a loss if uh, the stock stays above 7,060 or 7,000 um, on the last day. But it could be a loss if, let's say, it starts going down on Monday. So if we pick, this is Monday chosen right now. If it goes below 7,280, I start making a loss. You see, 2,098 loss, 1,527 loss, 441 loss. Yeah. 7,300. If it goes to 7,300, then I make a loss. So I book my loss and I get out if it goes below 7,000 rupees. Let's say that it stays above 7,000 rupees. I make a profit of 9,780 rupees here, right? And the investment required is 89,942 rupees. So it's a 10% profit in the next, how many days is it? 1, 2, 3, 4, 5, 6, 7, 8. In 8 days, I make a profit of more than 10% on my investment. So I would consider this to be a decent trade and go for it. I don't believe in naked trades, but if you were to, make a naked trade, I would remove this buy. It would require an investment of 1,75,000, and the profit that you would make is 12,215. So a naked trade of selling a put for 122 rupees is not something that I would go for. I would like to control my risk by buying back a put at 6,500 and getting out of this trade if it crosses anywhere below 7,060. 7,060, I still make a loss of um, 8,000 rupees if I cross 7,060 on Monday. But what is the probability that I would cross 7,060 on Monday? Let's say that, days go by, the trade keeps getting better if I stay above, on the 25th of this month, If the price continues to stay above 7,000, the loss reduces to 173 rupees only, you know, at 7,120. And the profit continues to increase and it goes up all the way till 9,780 on expiry day. That's all I have for you today. Ultratech Cement, guys. Fundamentals are good. Long-term investment, healthy. There is a potential for bonuses and splits because the face value is 10. However, if you get a very good profit on it, get out and get back in at a better price. Swing trading, hold on to it and get out when you get a decent profit above 8,000 rupees. Options, go for a bull put spread. I do not recommend naked trades. I hope you have enjoyed this video. Very soon I will be coming up with my next video, which is going to be on Concor, which is Container Corporation of India. I hope you look forward to this video, and I hope we make a ton of money off the stock markets. Have fun.